Welcome to the show, and right out of the gates, we're looking at some breaking news right now. This concerns the PBOC. This concerns this unrelenting bond rally. We now understand that a central bank is prepping hundreds of billions of renminbi in terms of the capacity to be able to sell bonds to alleviate some of the upward pressure we're seeing across some of these, some of the parts of this bond market, which is interesting given the fact that we are ending the week, of course, along the conversations, and in the next couple of hours or so, we'll get a better indication, of course, of what this 30-year bond auction that is also on deck today, how these two things play out. More details on this breaking news story. Jill Deesis is here on set with us, our Bloomberg News desk editor. What do we know about this?
Yeah, so I think at this point, this is essentially just what the PBOC kind of had indicated that they were going to do, right? So, I mean, this is really sort of quelling some of the speculation about how exactly the central bank would go about trying to cool, these plunging sovereign bond yields. So what they've done, we actually put in an inquiry to them, asking them about some stuff that we had reported earlier this week about these deals. Some of these financial institutions, they're saying they've signed agreements with several major financial institutions to borrow government bonds for them to sell. They're saying they now have hundreds of billions of yuan worth of medium and long-term bonds at their disposal to borrow. So again, I think really just kind of reaching into that toolbox, this other strategy that the central bank has sort of set up for itself. This is something that we had kind of heard alluded to several months ago when an old Xi Jinping speech about the idea of buying and selling bonds was floated. Again, the PBOC also said that this was potentially an option. So it does seem like this is a pretty unprecedented move that the PBOC is trying to take to cool this really overheated bond rally right now.
Yeah, and you're seeing the reaction in yields here as well off the back of this announcement. How long do you think, though, this lasts? Because we've got this sort of drip-fed policy announcement from the PBOC, we have seen the market reaction, but investors have come back to test them again.
Yes, Belle, I think that's a really good point. And also the fact that this is kind of showing that the PBOC is kind of in a bind right now, because they're using sort of the same tools to try to protect the currency. You know, this is in part a way to sort of, prevent the further devaluation of the yuan. But then they've also got to sort of take this and see how it kind of interacts with a lot of their economic policy right now, right? Because, I mean, they, part of the reason why we're seeing these bond yields fall so much is because there's, some concern about the economic outlook in China right now. There's this anticipation for interest rate cuts from the PBOC, but they haven't actually done that yet. And so, I mean, if the PBOC wants to eventually cut rates to sort of help the economy, that would itself lead to yields falling further. So this is kind of a really tricky situation that they're trying to balance here.
Market moving news, suffice to say. Check out the 10-year bond right now. We're up a couple of, 1 basis point, which is, looks small on an absolute basis, but certainly when you look at it from the context of how far we've actually come down. Suffice to say, markets are listening to this. This puts them a step closer to selling bonds. At what point do we know when they're actually in the market putting that inventory to work?
Yeah, I mean, I think that at that point, we're just going to have to kind of wait to see what exactly happens, how exactly the market's reacting to some of these things. I mean, obviously, again, this is something that the PBOC has been kind of telegraphing for a few months at this point. I mean, it was really just Monday that we got that confirmation from the PBOC that this is a strategy here. So at this point, we're seeing that strategy start to play out. We'll have to see how long it actually takes for that.
Jill Deesis, there are Bloomberg News desk editor with the breaking news, of course. They're on the PBOC, readying hundreds of billions of dollars of renminbi in the event that they do need to deploy that as well. Which takes us into the agenda for today and have a look at where we are. At least, let's take a step back. Of course, it's Friday. There's a jobs report, still a full trading day ahead. Suffice to say, it's been a very good week. We're at record levels, Japan, India, and Taiwan. On that very note, Korea, of course, we have the Samsung earnings, which we'll get to in a moment. Of course, Singapore is also coming online right now, 26-month high on the Straits Times Index. Now, all that being said, juxtaposed against what's been happening on the Chinese mainland, this losing streak currently, and I have to emphasize, we have a day left. We are currently on track for the longest weekly losing streak in 12 years on the CSI 300. Let's see what happens, of course, today in order to alleviate that dubious statistic. As they say, falling turnover, a couple of sectors to watch. As we were pointing out, the CGB bond auction today, north of 50 billion is being auctioned in 2054 bonds. And of course, in terms of data goes, Hong Kong foreign reserves are also on deck today.
Yeah, as you said, that losing streak we've seen. Let's take a look how futures are pointing toward the market open here today, because we are expecting moves around, of course, this PBOC news that we've got. But again, you're just looking fairly flat here. We have seen that market reaction so far coming through in CGB yields, though, after the PBOC looked or gave more details on this bond buying operation. What else we're tracking, if you change it on, just take a look more broader picture in the market landscape today, and we're not seeing too much movement, as you said. It is that story of the US markets being shut. We didn't get much of a lead in, but we are tracking a couple of trends. Noticeably, you've got copper that's moving a little bit high here. The yen just slightly firmer here today as well, though still historically low. That's more around the Fed rate cut expectations. Then you've got the Kospi standing out today following those Samsung earnings, as you mentioned. We actually are looking for a new 2024 high for the stock. And finally, quick check on what's happening with markets in the UK, of course. Again, we've got this anticipation around the election here, but that's the state of play. Fairly steady. A lot of these results already seem to have been baked in. Haven't really seen too much change in the opinion polling over the course of the last 6 weeks or so. Yeah,
and the fact that, to your point, right, we're not getting much of market reaction, underscores the point that we're not getting any sort of surprises either way. Counting, as Bell was pointing out, of course, we are getting more results coming in. Counting is underway. In terms of the UK general election, after exit polling, of course, projected this landslide win for the opposition Labour Party, ending, 14 years of rule from the Tories. Let's bring in, let's get the latest here from Yuan Potts here in London for us to talk us through where we are currently. Get us up to speed. By the way, thanks for staying up late. I know it's a fairly busy news day there. Get us up to speed. Where are we?
David, well, we're only 15 results into the election so far. There are 650 seats to declare in total. But spoiler alert, it is going to be a very bad night for Rishi Sunak's Conservatives. We will have a Labour government led by Keir Starmer by the end of the night. We know that because we have the exit poll. The exit poll suggests there will be a Labour majority of some 170 seats. To put that in a bit of context, Tony Blair, in his landslide victory in 1997, got a majority of 179. So a big win for the Labour Party, ending 14 years of Conservative rule. The party of Boris Johnson and of Brexit is being booted out of office. Rishi Sunak, you remember, stood outside number 10 Downing Street in that pouring rain and called the summer election. The weather improved, but his rating did not. The 20-point gap between Labour and the Conservatives just remained throughout the whole campaign. Anything they tried just didn't work. They spent lots of money on advertising. They announced loads of new policies, but in the end, people voted for change. And that was the key policy message from Keir Starmer. It's an election message which works right across the world, and people wanted change. He's also promised stability. We've had a very turbulent 14 years in Britain. Of course, we've had not just Brexit and all the negotiations with the EU, but the pandemic and the nasty inflation spike. So plenty of things for Labour to sort out. It does look like they're going to win big in this election. It's a big turnaround for the Labour Party. You remember they crashed to their worst result in 80 years last time, getting beaten by Boris Johnson. But Keir Starmer has really reformed the party. He's moved it to the centre, and he stood on a very cautious platform, promising not to upset any key voters and not to raise taxes. That was a key part of his pitch.
How credible do you think that policy is of not raising taxes? Because the public finance challenge facing the Labour government, if indeed it is elected, but it is pretty sizable.
Yeah, Annabelle, you're exactly right. It's a massive challenge facing the incoming government. Now, they have boxed themselves in on the public finances in many ways, and not only pledging not to raise income tax, national insurance, VAT, and indeed corporation tax, but they've also promised to stick to the Tories' borrowing rule, that is to get debt falling as a percentage of GDP by the end of the 5-year forecast period. They do say they'll borrow more to invest, so they're going to tweak the rules a little bit to allow more investment. But as to money for public services, services, it is in very short supply. And Labour has lots of things it would like to spend money on. The National Health Service, which of course takes up a lot of public spending in the UK. We have a nationalised health service. That is in need of money, and Labour would like to spend it, but it's difficult to find where that cash is going to come from. But the Labour Party under Keir Starmer were very keen not to upset any voters, so it was a very cautious platform. But he says he wants to bring stability to the UK and change, of course. I just want to talk to you about a little bit about some of the results we've had so far. Very interesting. We've only had 15 results, but already the Conservative Party chairman, who left his seat to move to a safer seat, what's known rather rudely as the chicken run, there's a chance that he may have lost that seat as well. The Chancellor Jeremy Hunt, we understand, is under threat as well in his seat. He's standing in a safe seat for the Conservatives in a prosperous part of the southeast near London, but we understand the Liberal Democrats have a good chance of winning that as well. So watch out for some more exciting results later on in the evening.
And where some other exciting results, or perhaps ones that couldn't have been predicted just a few months ago, could also come for Reform UK. Yeah. Talk to us about the success, because this is a party that was perhaps expected to get around 2 seats. It could be getting around 13. How much has that success also dented the appeal of the Tories?
Yeah, well, this is a really fascinating result coming out of the election today. Nigel Farage sensationally entered the election early on in the campaign. He previously said he might not stand. He was going to go and do stuff with Donald Trump in America. But he came in, and there's a good chance of him winning his seat. And, as you say, perhaps as many as 13 MPs getting elected. That will really be a first in British politics. The UK Independence Party, its predecessor party, previously won once at a general election. But 13 seats will be a big result for Reform. And the early results we've seen so far show they are piling up a lot of votes, and in some quite unlikely places. Now, Nigel Farage was clear from the beginning that his aim was to challenge Labour. Traditionally, his voters come from the Conservatives, but it looks like they're taking votes from Labour as well, and they're running Labour close in a number of seats as well. I think this causes a challenge for Labour after their first term. When the election comes up in 5 years' time, they will face a threat from a number of parties, including from Reform. What it means for the Conservatives is also very interesting, of course. They'll be left with, we reckon, about 130 seats, perhaps their worst result since 1906. And what sort of opposition the Conservatives turn into is really an interesting question. Do they move to the right to try and attract Reform voters, or do they move back to the centre to try and get Labour and Liberal Democrat voters? And the other key problem for the Conservatives is how many of their frontrunners will be left standing, because a number of them are going to be knocked out tonight.
Really great reporting there, Ewan, and a very big night ahead. So thanks very much for staying up for us as well. But that was Bloomberg's Ewan Potts in London. We'll have more with you. But later in the program as well, we're going to be speaking with a professor at the Harvard Kennedy School of Business, speaking about how Labour's big win in the UK could affect relations with China, David.
Yeah. Radamita joins us, of course, also a historian, I understand, of course, on the Chinese story. So interesting context there. Just ahead, we'll discuss the election turmoil on both sides of the Atlantic. We've done one, we'll do the other next, and what that means for currency markets, with the head of FX research at ANZ joining us in a couple of minutes, counting down to the open of trade, final one of the week. Shanghai, Shenzhen, and here in Hong Kong. This is the China Show. We're cheaper across the CGB curve today. You're looking at the 10s, right? And quite a pronounced move, relatively speaking, of course, to what we're usually used to visually on the CGB space. In case you missed it, so bottom of your screens is the fix for the day. More pertinent at this point in time is the breaking news earlier on, this Bloomberg scoop here, comment out of the PBOC. They're prepping hundreds of billions of capacity in terms of inventory and CGBs in the event that they need to use that. They're tapping the banks, of course, which is frankly the conversation around bond markets this week, where cheaper markets are responding to that.
as you said, you've got that slight move there in the 10-year yield, but it has been really that expression. You can get the PBOC serious about battling the bond bulls, but are they serious about as well battling that economic downturn that's also being reflected in the Chinese currency? Let's bring in Mahjabeen Zaman, head of FX research at ANZ. And Mahjabeen, do you think that this bond buying program shifts the calculus at all? I know that you're focused more on G10, but perhaps look at that question even in relation to how the yuan trades against major peers like the Japanese yen.
Look, I think there are a couple of reasons that have taken yields, Chinese government bond yields so low, right? There's been gloomy economic outlook here there in China. Of course, they've been cutting rates. And also investment demand has been, with the lack of alternatives, I think the investment demand for CGBs has also been quite high, so pushing yields lower. Now, I think this is one way to stabilize the bond market at the very least. But coming back to the CNY, look, I think we are approaching the key level, 730 or so. This was, a key level last year where we saw PBOC to come in to sort of defend. So I think this is something we're watching pretty closely. Interestingly, we have seen the Japanese yen, for example, kind of both these currencies have been moving in tandem. It seems like, in terms of how they've been weakening. And so I think that comes to their trading relationship that we observe.
Yeah, well, since you mentioned the yen, in about, I think, 25 days from now is the BOJ meeting. What do you think they will do and what do you think they should do?
Right. Look, I think we think they will raise rates at this meeting by 15 basis points. I think there are two things which will drive that. First, we saw wage increases from the Rengo negotiations come through at about 5%. That is a little bit, that's significantly higher than last year, which was about 3.5%. So, tick for the wage inflation side of things. Then we look at the Tankan survey that came out this week, and that also shows that inflation expectations for businesses are edging higher. So again, this supports potential BOJ hike coming up, but whether it supports the yen and strengthens the yen is a different question.
Right. Okay. Give us your upside on dollar yen right now. What should not surprise us if we get to that level?
Look, I think 165 probably is the level we think, which kind of matches with Kanda's 10 yen rule. But of course, at the end of the day, Bank of Japan or Ministry of Finance will be looking at the volatility and not really the level. And, we have been, very gradually moving weak in the yen, coming to that high 161, touching 162 over the past couple of days. If this continues to move gradually, don't think there'll be intervention. At the end of the day, I think, the dollar yen yield differentials have been a key driver. We have seen that break down a little bit, and we think that Chinese, we have seen a stronger correlation between Chinese yuan and the yen. I think that's a little bit, so we have to see which way the yuan continues to move as well.
We're also just monitoring the election results coming through in the UK right now. We've actually just seen Reform UK, that's Nigel Farage's party, winning Ashfield. That's their first election win. They are on course or tipped to take about 13 seats this time around. The pound, though, isn't seeing too much of a reaction so far. Is it just an expression that really a lot of these results kind of seem to be a foregone conclusion?
Yeah, I think this Labour victory was pretty much as you said. It was priced in, but when the election was first called, we already did see a muted reaction in the gilt market, limited volatility in sterling crosses. And what we have noted lately in the last 2 years, since the trust story which happened, that the sterling has been less sensitive to shocks, political and fiscal. And I think that's what's playing out. And I think overall we continue to remain positive on the sterling into year end, but that's really on the back of what the Bank of England doing and what the UK macro story is saying.
Yeah, Liz Truss, of course, I don't think investors have really forgotten that mini budget crisis back from 2022. But talk to us about where the pound moves from here, because if we do have that sort of political stability, how does it set up the BOE, and could we see a move perhaps as soon as August, do you think?
Yeah, look, we think the first rate cut from the Bank of England is expected in August. I think they are looking at two key things. One is services inflation, and the other is wage increases. Now, when we look at services inflation, yes, it is sticky at about that 5.7%. But I think one thing we need to note is when we do a deeper dive into that services inflation, we see that it's quite focused on restaurants and, just going out rather than the bigger picture. So I think, Bank of England governor come out to say that he might look through that. Not every category in the inflation, number has to be at 2%. So I think that kind of drives us to a more dovish view for the BOE ahead.
Right. Just a follow-up on that, then we'll talk about the Fed. Very quickly, in about 10 seconds or so, Euro pound, where does it go, up or down?
Euro pound, we are positive only because we don't think ECB is going to get more dovish than they are, but the Bank of England has room to get more dovish.
Yeah, okay, so that covers the French elections then. Let's talk about the Fed. Soft data this week so far. When do they move, and does the soft dollar story continue? Because I look at your cable forecast, that seems to be the case.
Yeah, 100%. Look, we're calling for a weaker dollar. We think, of course, beyond the non-farm payrolls, which we know has been a little bit of an tends to outnumber the rest of the labor market. I think overall we do call for a weaker dollar. The reason being that I think going forward we see U.S. exceptionalism fading. We think about the Trump effect if Trump comes in. Last time we saw a huge rally right after he was announced, but that was a surprise outcome. This time, it may not be as a shock or as a surprise to the market as it was the last time. That's one thing. And the other thing is we also got to think about the fiscal deficit. I think whoever comes into power next is going to keep spending. That's not going to look good for your sovereign credit rating side of things. I think that's probably all else equal should weigh on the dollar over the long term.
Oh, you've opened up a can of worms there. We can talk about that next time. Ajabin Zaman, there, have a great weekend ahead. Jobs report notwithstanding. Head of FX research at ANZ. The opening bell, 7 minutes away, Hong Kong, Shanghai, and of course this big move up in the CGB space following the Bloomberg scoop. Plenty more ahead. This is Bloomberg. Happy Friday. All right, jubilation as there we go. And of course, this landslide victory on your screens right now is Keir Starmer, which we understand and should not come as any surprise, of course, may be declared soon. Okay, I'm going to hedge my verbiage there. Let's see what happens here. But all that being said, of course, the bulk of our coverage today is really taking you through the results here out of the general elections there. Landslide victory, of course, first one in 14 years. We're back to power after 14 years there in terms of labor. Okay, going into the open today. Oh, thank you so much. Okay, for that applause. We're flat on the Hang Seng Index going into this one as well. We are still on track, though, for a weekly gain on the Hang Seng Index. The big news, of course, earlier on, in case you missed this, is the Bloomberg scoop on the PBOC readying hundreds of billions of renminbi of inventory in case they need to sell into this market. Coming up next is the open, plus, of course, some of the other sectors we're tracking, EVs, chips, and everything else. The open is next. This is the China Show.
Welcome back. You're watching the China Show. We're counting down to the start of trade here for mainland markets and Hong Kong. Futures just pointing to pretty modest start to the day. No lead in, of course, the US shut for a public holiday, but the focus is really on elections, actually, at this point in time. Looking ahead to the French ones, of course, on the weekend, but the UK election very much picking up momentum now, and we're seeing seats being called for Labour really across the country. Yeah, as the exit polls had initially suggested anyway, and we're looking at some strength coming through. In fact, on the currency, a little bit of strength. Futures are also pointing higher in FTSE futures going into, of course, the London session. Speaking of elections, right, so we have the UK, we have the French, and of course, one eye is also on US elections. Any sort of developments there. It is, of course, a holiday, but given all the speculation coming out of Washington. Big Biden interview on Friday with the ABC. With ABC, yeah. I think that airs at 8 p.m. Eastern time. Eastern time? Okay, so that's Saturday morning. We will be nursing our hand. I'm kidding. I'm kidding. Just stuff with a hot cup of Joe after we do our 20K run in the morning. How's that for a pivot? The PBOC prepping hundreds of billions of renminbi in terms of their capacity to sell. That was our breaking news earlier on. We are seeing yields picking up. You're looking at the 10-year yield on your screens up about 1 basis point there. We're looking at gains just about across your screens. Now, all that being said, though, I mean, we're still down, currently 7 weeks. We'll see whether or not we do get a 7th week by the time we close the day. If we do get 7 weeks of losses on the CSI 300, longest losing streak in 12 years. We'll see. Okay, Hong Kong.
What's the open looking like today? The better. We're looking at 18,000 yet again, although we have been fine, a higher range compared to the start of the year. But we have been stuck in somewhat of a range, of course, the last few weeks or so. A third of 1%, 10 cents, as you can see, 4/10 of 1% there. We are still on track, though, for a weekly gain as far as Hong Kong is concerned. This comes amidst really this global risk rally that's seen really Japan, India, Taiwan record highs, 2-year highs on the Asia-Pacific index, 2-year highs on the EM basket, and, of course, where we are in Europe, just multi-week highs there. Okay, a couple of movers to tell you about. We had earnings out of Samsung and also LG, by the way, coming out these last few minutes or so. So we're looking at some of the related names there, like Hua Hong, for example. NIO came out with a statement following the expected imposition of tariffs over in Europe, and they're maybe looking at tweaking some of their prices because of the tariffs in place. Their Trip.com pulling back after the big move yesterday. New World Development, the story there is they did offer, I believe, the lowest prices in 8 years in one of their apartment blocks in Kai Tak, which is where the airport used to be here, an old airport. Lowest price in 8 years. Generally speaking, not much reaction to everything I just mentioned. There we go. In terms of turnover, we're looking at this amidst this price decline onshore. That on Wednesday and yesterday were the lowest daily turnovers. Sorry, I'm playing with grammar there. Going back to the start of the year, so we're watching turnover here as well. I guess to give us an indication of how subdued sentiment remains here in this onshore Chinese market.
Yeah. Absolutely, and actually just taking a look at turnover in just the first few moments, it's still pretty far off its 20-day moving average. But let's get more on this now, bring in our Asia equities reporter Charlotte Yang, and our senior Asia stock reporter Hideyuki Sano over in Tokyo. And Charlotte, we'll start with you. What exactly do you think the outlook is over the shorter term for Chinese equities? Because as Dave said, that turnover is so low. We've seen a real bout of weakness again. The momentum seems to have sort of given up. Is it too late again to be really throwing in the towel, though?
I think we're seeing this big divergence among, Hong Kong stocks and the onshore equity market. Where I think everybody's eyes today is focusing on the onshore equity market. We're seeing one bearish signal after another. So yesterday, the trading volume took a big hit. Around 4,900 stocks were in the negative territory. And, margin trading, which was usually a signal for atmosphere, also, being hit a lot. So the key thing everybody's watching is whether we're going to see the national theme, I think, stepping to support the market. Now you have the Shanghai Composite also falling below that 3,000 key psychological level. And we have this big meeting coming up the week after next, which I think authorities would want some stability in the equity markets, which we have such a large group of retail investors in. So there's a lot of uncertainty, but I think those ETFs favored by China's sovereign wealth fund, which is usually seen as a signal of national team support, will be where everybody's watching.
Yeah, I was going to ask you as well, what have we seen so far to indicate that the national team might be looking to get involved, if not already?
So in the past few weeks, we have seen, some of those ETFs that track the CSI 300 index and are the, national team favorite. We've seen, closing to the, whenever it approaches the closing time of the markets, we're seeing some more sizable inflows into it. But this time around, it hasn't been as much as, earlier in the year. So I think the ETFs flows is the most an obvious way, easier way to watch.
Yeah, and Hide, to bring you in now, we might be looking at sort of multi-year lows or losing streaks for Chinese equities. Japan ones, it's a very different story. And if anything, it's just that picture of the rally starting to broaden out.
Hi there. Yes, exactly. And there's talk that investment that went to China may be coming back to Japan again. I mean, during the last quarter, Japanese stocks have been a little bit sluggish. But since last week, the market suddenly came back to life. And some people say that's partly driven by speculation that Trump might win the U.S. presidential election, and that means tough time for China, and therefore that's good for Japanese markets. I mean, that's, to me, seems a little bit speculative at the moment because there's still 4 months ahead of the election, but that's what some people are talking about right now.
Okay, what else is on your mind not just Japan, right? So Japan's doing well. a market like Taiwan and Korea, which have really good AI representation, have done well. Is the sense that you guys get talking to your sources and your investors here that you stick with the winners for now?
Yeah, I think it's interesting that this time the rally in Japanese share market seems to be driven more by banks and insurers rather than anything related to AI. So there seems to be a little bit of difference from countries like regions like Taiwan and South Korea. And the main driver of Japanese bank shares and insurers shares are expectations that the Bank of Japan is likely to raise interest rates as soon as July or in September, October. So that's one thing. And another thing, of course, is, again, Trump. He seems to want to basically keep interest rates low, but he also seems to be very keen on stimulating the economy. So the yield curve, the U.S. yield curve has steepened sharply, and that's very good for Japanese. That's good for banks, and Japanese banks outperformed global peers during the last couple of weeks. So. Looks like it's a bit of both domestic and global factors helping Japanese financial shares.
Hide, what about consumer stocks or other parts of this Japanese equity market that might come alive in the second half? What's the conversation around sector rotation there?
Yeah, I mean, that's probably one of the biggest focus at the moment. They have been very sluggish during the first half of this year. I mean, food companies or retailers' shares have risen less than 10% when the Topix has risen more than 20%. And that's reflecting basically very sluggish domestic consumption. Now, the hopes are, among investors are that real wages are going to start increase sometime later this year, and that's going to sort of finally kick off a positive cycle of rising inflation and rising wages, leading to rising consumption. So people are still pinning hopes on that, but then again, there's no evidence of that happening. So people are just very anxious to see that, evidences of that happening.
Right.
And Charlotte, you talk about sluggish consumption. Of course, it also applies to the Chinese domestic market as well. We've got earnings coming up. What do you think is going to be the main theme? And some people are saying actually we could start to see some green shoots as well from the numbers.
Yeah, well, just to also sneak in, talk about EVs too, because it's also the big story today.
Yeah. Okay, yeah. I think for today, the market and EV shares, so the last time I checked, they actually still feel a little bit at the open. Even though the preliminary tariff decisions was largely expected, especially, with Geely, those have a bigger export exposure. But we are also starting to hearing from traders that we might see some rebound in those startup shares, such as, NIO, Li Auto, XPeng, because they have fell so much this year, falling more than 40%. With Leo, we actually saw its bullish options. Now, call options contract traded more than 7 times of the put contracts. So we could be seeing some of the rebound in those shares starting.
All right, Charlotte, that was our Asia Equities reporter, Charlotte Yang there, and our senior Asia stock reporter, Hideyuki Sano, and we'll have more ahead. This is Bloomberg. The European Union is moving ahead with plans to impose provisional tariffs on Chinese EVs in a step that's likely to escalate trade tensions with Beijing. For more, our Asia Transport reporter Danny Lee joins us now. And Danny, the levies are as much as 48%. It seems like, of course, we know there's sort of a difference in levies depending on even who cooperated with the investigation more. But who are the big winners and losers out of this scenario?
I feel like at the moment everyone's a loser, and what the European Union kind of signalled, the European Commission signal really is that it's not backing down at this stage. I know we had the provisional tariffs guide last month. This is, as of Thursday, yesterday is the implementation of those tariffs. We've still got around 4 months, though, before the definitive tariffs are put in place, and so therefore a lot of horse trading will happen between now and then. The intensity of the talks that China has signalled it wants with Brussels, and so the kind of mood music from Beijing initially is that, okay, well, we want to see some kind of changes here. They're not getting too angry right now, and Brussels seems open to the idea. And there was an interview Bloomberg did with Valdis Dombrovskis, the European Commission's Executive Vice President, who signalled that these tariffs don't have to happen. As long as there are a meeting of the minds and everyone gets a satisfactory result. But clearly still the concern right now is there is a distortion in the market of market subsidies that it wants corrected with Chinese imports of EVs.
Yeah, I think the Ministry of Commerce, China's Ministry of Commerce I think it's a daily or a regular press briefing yesterday said that they are also hopeful to reach some sort of agreement ahead of that. What happens next then, Dan?
Yeah, I think what happens next is really the talks and the substance of whether there is one issue or there is multiple issues. Clearly, what we have heard so far is that the European Union or the European Commission would like to see tariffs on its cars into China reduced. Currently, that's at a level, I think, around 10% or so. And so, therefore, could that be changed? And then for Brussels, can they pull themselves back or maybe cancel out the additional tariffs altogether? So I think the key thing here is the Ministry of Commerce's comments is a more measured tone. Clearly it wants to see some kind of positive action, and so it's not looking to be saber rattling with the kind of threats of retaliation on EU trade. So I think that's a key sign right now.
Danny, fantastic. Danny Lee, their Asia transport reporter. Danny, of course, mentioned the European Commission conversation that we had, in fact, with Valdis Dombrovskis here, who spoke exclusively with us, of course, about tariffs and about whether or not he expects China to retaliate. Have a look and listen.
Today, we took the decision to impose provisional countervailing duties on Chinese battery electrical vehicles, basically to ensuring the level playing field and market distortion coming from subsidies which China is providing to its battery electrical vehicle producers. So our investigation has been done in strict correspondence with applicable WTO and EU rules, facts-based. So from that point of view, we do not see any basis for retaliation, and in any case, it's clear that we need to treat different cases separately.
So you're not even worried about retaliation, for example, into pork? They're investigating it, and if there was to be retaliation, are there specific industries that you think would be most at risk?
Well, as I said, we are not seeing the basis for retaliation, as what we are conducting is indeed in line with WTO rules. What we are also noting is that actually we are currently the largest market which is actually open to Chinese battery electrical vehicles. We know that other jurisdictions like US, for example, have recently imposed 100% tariff on those. So our aim is not to close the market to battery electrical vehicle producers from China, but only to ensure the fair competition and level playing field. So therefore, once again, we do not see any basis for retaliation for that.
So how's the progress going in terms of talks with China? And actually, is there willingness from China to make some of the substantial changes that led you to then put the tariffs on? Those talks with China are ongoing, and indeed, should the mutually beneficial solution emerge, we can also find ways and not to apply at the end of the day the definitive tariffs. But it's very clear that this solution needs to resolve the market distortion which we are currently having in battery electrical vehicles and risk of injury for EU industry, and it needs to be WTO compliant. Are you worried that member states can actually then block this, block the tariffs in November, or force the EU into a bad deal?
Obviously, we are in a close consultation with member states now, also prior to imposition of those provisional duties. And it's clear that member states are also interested to protect their automotive industries from unfair competition and from risk of injury, as actually the market share of Chinese, both Chinese brand and broader, like made in China battery electric vehicles, is rapidly growing. So from that point of view, if we leave the situation unaddressed, it's going to create more and more problems actually for EU automotive industry.
Executive VP, we're also days away from the second round of the French, of course, legislative election. Are you worried that a hung parliament would actually delay any kind of negotiation on policy or would delay the workings of the European Commission and the EU?
Well, definitely we'll have to see. Well, there I have to provide somewhat institutional response because in the European Commission we have a clear policy that we are not commenting elections or party politics in member states. We are working with democratically elected or appointed authorities from member states.
That was the European Commission Executive Vice President Valdis Dombrovskis speaking exclusively with our colleague Francine Lacroix. And here are some of the other big stories we're following from around the world this morning. China and India have agreed to hold further talks to resolve a long-standing border dispute. Indian officials say Foreign Minister S. Jaishankar and his Chinese counterpart Wang Yi met on the sidelines of the Shanghai Cooperation Organization summit in Kazakhstan. A separate Chinese statement says Yi told his counterpart China and India should actively resume normal exchanges. China and the UAE are set for discussions in the coming weeks to increase two-way flights. Sources say officials will meet in Beijing to discuss granting airlines more access after years of stagnant travel growth. We're told both sides want more connections above the current 56 flights per country each week. A senior US official says Hamas has broadly agreed to a framework of a ceasefire proposal with Israel. The proposal was received early this week through Qatari officials. The US officials calls the development encouraging, saying it may provide the basis for an agreement to free some Israeli hostages from Gaza. Israel is now said to be sending a delegation to Qatar for further talks. And we are just about 20 minutes into the session so far. Not looking too great for the Chinese equity session so far on the mainland. You've got stocks there dropping 0.6%, but importantly on course to erase their year-to-date gains, and also looking at their longest losing streak, the CSI 300, in 14 years. We'll have more ahead. This is Bloomberg.
Welcome back. You're watching The China Show. Here are some top corporate stories that we're tracking. At this point, HSBC's sale of its German wealth management unit is said to be attracting initial interest from peers, including BNP Paribas and UBS. And sources say Julius Baer is also studying the proposal or the business, which could be valued at around $640 million US. Now, HSBC is said to be keen for a buyer with a global brand and existing operations in Germany. Now, Bloomberg's learned that insurance giant AXA has been in talks with BNP Paribas about options. This is a big one, of course, for its investment management unit. And we're told discussions between the French firms have focused on creating this JV between AXA Investment Managers and BNP Paribas Asset. Now, the combination would have a total asset under management, of course, get this, $1.5 trillion US. The Hong Kong developers New World and Far East are selling a residential project at the lowest price in 8 years for the city's Kai Kak district. Now, Midland Realty says the pricing represents an almost 30% discount to other projects in that area. Home sales in Hong Kong have resumed falling amid high borrowing costs, even after extra taxes were scrapped earlier this year. Right, back to markets, and I think Bell took you through this as well, this reversal we've seen in the CSI 300. And as we speak, we should be on track to effectively be back to square one as far as 2024 is concerned. So we've erased year-to-date gains, and perhaps this streak of 7 weeks of losses has been enough to erase all of that. So we're currently on track. So the last time we had 7 weeks of losses was back in 2012. Not the same magnitude, but as far as the streak is concerned, we've ticked that box.
Yeah, certainly just an expression that really the momentum we had around Chinese equities has pretty much dissipated, at least for the mainland. But it was interesting, again, what Charlotte was pointing out earlier, that sort of divergence that you see between mainland Chinese equities. Hong Kong is actually faring quite a lot better.
Yeah, some of the big names are listed here, of course, your Tencents of the world. And, I've lost count of the number of guests who have told us that China remains a tactical trade. And within that call of being tactical, the preference is really for the names that are familiar with foreign investors, right? Alibaba, Tencent, and most of the names listed here in the offshore space in Hong Kong. The other big piece of news, of course, was the PBOC early on.
Yeah, that's right. We're getting more details of this plan to prepare hundreds of billions of yuan for this bond sale capacity, sort of assembling a war chest of sorts. Yesterday we had that reporting that 2 banks were in the line. Now we're getting details that there's perhaps several major banks that are signing on to this. So again, you're seeing that market reaction today playing out in yields. The question is how long that sort of reaction persists for. More ahead. This is Bloomberg. Welcome back to the China Show. You're taking a picture at a live shot there of Keir Starmer, the Labour Party leader in the UK, who is celebrating really what's shaping up to be a landslide victory for his party in this latest UK election. We're actually getting some updated forecasts now coming through from ITV, and they're saying that Labour could take 414 seats. That would be more than the earlier projections we had for 410 of the 650 seats in the House of Commons. This is a victory of sorts. To put it in perspective, we have not seen such a landslide going all the way back to Tony Blair in 1997, but perhaps still unlikely to see the same level of euphoria that we had back at that time, given just the size of the challenges that are facing this possibly new government coming in. But let's get the latest now from Bloomberg's Yuan Potts in London. And Yuan, as we said, setting up to be a very big victory for Keir Starmer tonight.
Results out of 650. This is the time of the night where the results all start to flow in, and it's looking like a very bad night for Rishi Sunak's Conservatives. The exit poll suggests that Keir Starmer will be the next Prime Minister of the UK with a majority of around 170 seats. Put that into context, Tony Blair in his landslide in 1997 got a majority of 179. So watch out for that figure. Now, the exit poll also predicts good gains for the Liberal Democrats. They're having a very good night. They're the third party. And also a surprising number of seats taken by Nigel Farage's Reform UK party, which is a new entrant to the political scene. They're projected to win as many as 13 seats. I think after 14 years of Conservative government, the country was really ready for a change. It's been a very turbulent period for the UK, not just the Brexit referendum 8 years ago and all those negotiations with the EU, but the pandemic and an energy price spike, inflation getting out of control. So Keir Starmer stood on a platform of change. It's an old election winner around the world, and it's been very successful in this election as well. And he also stood on a platform of ending the chaos, to use his words. And it has been a pretty disruptive few years in the UK. So a big win for the Labour Party, and it's looking like a very bad night for the Conservatives.
Yeah, Ewan, just hold a thought. We'll talk more about what they're likely to do now with this mandate. In the meantime, we'll take you straight back, of course, to the UK, where it is 3 a.m. and certainly with this big win, we're listening in, of course. Let's go through that now.
Who hold the power of the vote. It all starts here, and it starts with you. Change begins in this community, with the people who came together to make life better, like the fantastic councillors who work so hard for our area. Service starts in this neighbourhood, the groups, the faith communities, the local organisations who serve week in, week out. And hope starts with that one kid from Somerstown who dares to believe that the future belongs to her. And with Labour, it will. Because I promise this, whether you voted for me or not, I will serve every person in this constituency. The mothers I sat with who've lost children to knife crime.
Okay, Yuan, let me bring you back here. I'm not sure if you were able to make out anything clear there. Of course, I think one of the priorities should be a banter, of course, is perhaps get a new audio system. Yuan, talk to us about what we know about what their priorities are, particularly on the foreign policy front.
Yeah, Keir Starmer's platform in this election was really one marked by caution. You remember Labour slumped to a massive defeat last time in 2019. It was their worst defeat in 80 years. And this time they weren't going to risk anything. So Labour has promised not to increase any of the main taxes. They're going to stick with the Tories' borrowing limits to keep borrowing down over the course of the 5 years relative to GDP. So it was a cautious programme. And he says he wants to serve the British people. Keir Starmer on foreign policy, quite interesting, wanting to maintain close ties with the US, as you would expect. There's been lots of questions about how we would work with President Donald Trump. I think the two men are very different. Keir Starmer is a lawyer, is a very cautious man, and never speaks without thinking first. He doesn't shoot from the hip. But of course, we've seen Republicans and Labour leaders working well together in the past. Interesting what Labour are talking about with the European Union. Brexit was really the dog which didn't bark in this election. There wasn't much discussion of Brexit. I think everybody's bored with it, and the party's certainly keen not to talk about it either. But Labour's policy regarding the European Union is they would like to have a closer relationship, but they're clear they will not rejoin the EU in the next 5 years. They will not join the customs union, and they will not seek to have any closer ties on those big issues. They would like to renegotiate some of the smaller parts of the agreement, and they want to work with Europe on defence and security as well. So there'll be an inching closer to Europe, but nothing radical on that front.
And Ewan, we were talking earlier about Liz Truss and all of the market turmoil that came back in 2022. This time around, the market reaction is a lot more subdued. But do you think there's enough recognition now from UK politicians that they do need to tread a little bit carefully when it comes to gilts?
Yeah, Annabelle, you're exactly right. Of course, remember the disastrous mini-budget with Liz Truss, where all those unfunded pledges, big tax cuts when the government's finances were already stretched, really roiled the markets. So Labour have been doubly cautious, not just for electoral reasons, but also because it would be catastrophic if that were to happen again. So they promised to stick carefully to the borrowing limits. They are going to borrow a little bit more to invest, but it's all been cautious. And they've been speaking over the last couple of years to business leaders. They're very keen to get growth restarted in the UK. They point to the last Labour government, which saw the economy grow by 2.5% of GDP on average throughout that period. They'd like to get the UK growing again. Growth has been pretty lacklustre in recent years, but they do not want to upset the market. So it has been a cautious programme.
That was Bloomberg's Yuan Potts there, staying up through the night for us with all of these results that are rolling in and a very big victory shaping up for the Labour Party in the UK. But let's shift from that reaction we were talking about in gilts to what's happening closer to home with China's central bank, because it's taken the next step towards selling government bonds to cool a record-breaking rally. The PBOC says it's now secured hundreds of billions of yuan of securities at its disposal through agreements with lenders. Bloomberg economist David Chu joins us now for analysis. And David, do you see this having much of an influence at the macro level when it comes to liquidity and money supply?
Well, theoretically, if the PBOC sells the bond in the market, that would mean liquidity withdrawal from the market by the PBOC. If the PBOC does not use other tools to inject the liquidity correspondingly. But to be honest, we don't think that the PBOC will, at this moment, we don't think the PBOC will tighten the liquidity. So that if the PBOC sees any possibility of liquidity tightening, I think the PBOC will give more money to the banks. So that means that the overall liquidity level should maintain the similar as before the PBOC is selling.
Yeah, and David, on the surface, this, the two objectives might seem contradictory, right? The expectation that rates should remain low in China, but not too low as to trigger, of course, some version of intervention in the bond market specifically. How does this change the outlook for the monetary policy stance overall?
Well, we don't think that this means a swing of the monetary policy, because the monetary policy stance will definitely be defined by the macroeconomy fundamental, but not the bond market situation. But going the other way, we think that there could be a misunderstanding between the market and the central bank. The market has been buying the long-end bond over the past several quarters with the outlook that the economy will likely remain sluggish in the foreseeable future. But on the other hand, we see that the PBOC has reiterated that the economy will one day recover. So that I think that is one of the pre-assumptions when between the market and the central bank. So we think that the PBOC will stick to the easing stance, but as we have observed since last year, the PBOC's easing is not so quick or not so aggressive as the market has expected. So that we think what we should look at is not whether the PBOC will swing the market, the monetary policy stance, but how the difference between the market and the PBOC will evolve in the future.
David Xu there, our Bloomberg economist, his take on the commentary coming through out of the PBOC here. Right, and back to the broader markets, we're looking at, global equities are headed for, we've hit a record effectively this week. We're still seeing some upside. We're perhaps running into a wall at the U.S. jobs report. It depends, of course, what that looks like. Currently, we are on a 5-week run as far as the MSCI All Country Index is concerned. So it's been a good stretch of wins. Mary Nicholas with us out of our M Live team. Mary, it's been fantastic. Is there anything you see in the immediate agenda future that might get in the way of this momentum?
Yeah, it'll be about payrolls today and how payrolls unfold. So, for example, if we get a weak payroll, then we can see that the equity market might stumble a little bit. But at the end of the day, they'll realize that a weak economy could signal that, and softer data overall could signal that the Fed is going to cut. But also at the same time, you could argue that if as we've seen recently, that soft data has been ignored by the equity markets, and the focus has just been on the fact that the resilience in the economy still continues to hold, and that's fueling the equity market rally. So, but overall, you will get a knee-jerk reaction from payrolls, especially if we get something on the softer side. The key thing, though, is what happens with average hourly earnings. If average hourly earnings proves to be resilient, then of course the concerns of stagflation has more of an impact on and can force stocks to tumble a little bit more.
Give us a sense of the magnitude of that, the hourly earnings. How much would it have to sort of disappoint then investors? Because even if it pushes that projection out by, say, a couple of months, is that something that really does bring the rally undone?
Yeah, if you look at, let's say, what the market is pricing for the Fed, they're looking at a 70% chance of a Fed rate cut in September, as soon as September. You take average hourly earnings into that. If, let's say, you get a higher push on average hourly earnings, that's going to push it. That's going to keep November very much in the game and push expectations on September out of the way. And obviously, that'll have an impact on, for example, on yields and on the equity markets. But again, it'll be for equity markets, it's really about the knee-jerk reaction and how they respond to it. Because if we look at it, it really comes down to fundamentals for the equity markets and how the earnings will unfold. So over the longer term, so that equity market rally can continue, especially if we see earnings moving in the right directions. Starting next week, we'll start seeing that kick off. And if it continues to prove to be on the upside and to prove to show its resilience, then equity markets have very little standing in the way. And what we'll see is just a bunch of blips and starts that falter it for only temporarily. But really, the long-term trajectory still looks positive.
Yeah, certainly the earnings projections we're hearing seem pretty optimistic still. But let's talk about the impact of elections. We've sort of seen, well, the UK, for instance, has been a fait accompli. In France, we're seeing Marine Le Pen's national rally looking to fall well short of an absolute majority, so that's being seen as more of a positive. What about the UK and what happens in the days ahead? If Biden stays or drops out of the race, do you see that shifting sentiment at all?
Yeah, it's interesting how much election risks have really played over the last few months. Whether you look at India, Mexico, we've all seen a little bit of volatility in the markets as a result of election risks. The thing with the UK election is it actually delivered. So there were no surprises. We knew that Labour, especially based on polls, that they were going to win by a landslide and enjoy that landslide victory. So the markets were very well prepared. Where it would have jolted the markets and where it would have jolted traders if there was any sort of surprises that moved us away from that or had considered a hung parliament. Obviously, we're not there. And now that the elections, the UK elections, are now out of the way, the focus now shifts to the French elections and what sort of and how it plays out for Marine Le Pen's party and the right wing and how much it takes over. Of course, the key thing here is what are the implications on French bonds and on the budget deficit. And that, of course, is going to continue to weigh on investors and keep markets a bit shaky. One thing we can see is, especially with the election risks out of the way now in the UK, and there's still some election risks coming through for the euro, you could see euro sterling actually heading lower as a result of that. So in the meantime, I think it's still not a done deal for France to be completely, for investor concerns to be completely allayed. So that's going to, of course, weigh on French bonds and the euro as well.
That was Mary Nicola there, Bloomberg's MLive strategist, and you can follow more on this story and all of the day's trading on our Markets Live blog. That's on Bloomberg at MLive Go. You can get a market rundown in one click, and there's commentary and analysis from Bloomberg's expert editors, so you can find out what's affecting your investments right now. And later on the China show as well, we'll have more analysis on the UK election results. We're going to be hearing from Harvard Kennedy School of Business professor Rana Mitter. That's up ahead. And first, Samsung is rising after an AI-fueled memory chip recovery delivers its fastest sales and profit growth in years. I think Samsung actually looking to hit a fresh 2024 high. We'll have the details ahead. This is Bloomberg. All right, taking a look at shares of Samsung here and other chip names so far. We are moving higher for Samsung. Actually, we're on course for a fresh 2024 high. A little bit less movement we're seeing in the Taiwanese and Hong Kong chip makers so far. LG, of course, also on the move, but that's more of its own earnings story as well. But let's get more on Samsung here because it's just posted its fastest pace of profit growth in years. And that's as AI development fuels global memory chip demand. For more on this, let's bring in our Asia stocks reporter Yu Kyung Lee in Seoul. And Yu Kyung, talk to us about the results, how Samsung was able to pull this off.
Yeah, so this was the quarterly earnings preview where Samsung announced that it posted 10 trillion won worth of operating profit during the second quarter ending in June. And that was expectation beating. Analysts I spoke to said this was a big surprise, higher than some of the highest estimate offered by the analysts. So where does this surprise come from? They said it's definitely the semiconductor, the memory chips. Even though Samsung has been seen as lagging behind its key rival SK Hynix, the company probably has some of its fortunes turning for the better for the latest quarter. For example, the memory chip prices have gone up lately thanks to the demand from the AI, and some of this memory chip called NAND also saw huge demand coming from enterprise storage. It also had some reversal in the inventory valuation loss, according to some analysts. And one other thing that probably contributed to Samsung's second quarter earnings also was that better than feared performance by some of the businesses outside the semiconductor business. The company probably shipped weaker smartphones sales last quarter, but it probably did better than what was feared. So that's all seemed to be contributing to its better than expected results. We'll hear more about its divisional breakdown and details of its earnings result later this month from Samsung when it holds the conference call.
Yeah, I mean, Yu-Kyung, to your point, right? Well, as you were literally speaking, the share price just topped the highs for this year. And I'm now looking at the distance from, I believe, the all-time highs we hit back in 2021. We're just about 5% from that level. What pushes us over the edge there? What gets us all the way up? The next catalyst to watch here for investors.
Yeah, so Samsung's share has been rising almost 2% this morning, extending its gain from yesterday, eyeing the highest close since April 2021. So the next catalyst from here would be when Samsung would get the highly anticipated approval from NVIDIA to supply its own version of HBM. Now, its rival SK Hynix has been the dominant supplier of NVIDIA for the high bandwidth memory chip that are crucial for AI accelerators that NVIDIA is building. But it's not just Samsung that's desperate to supply its own chips to NVIDIA. NVIDIA also needs extra suppliers outside SK Hynix in order to meet the surging demand for AI applications. So the next catalyst that investors are watching is when that Samsung will finally get this highly watched approval from NVIDIA to supply its own HBM3E chips. And a lot of analysts I talked to this morning said that will likely happen soon. One predicting that could happen during the fourth quarter of 2024. So we'll definitely be watching for that.
Yu-Kyung, fantastic. Thank you so much. Our stocks reporter there in Seoul for us on the latest out of Samsung and really what to watch moving forward. Some other corporate stories we're tracking at this point. So if you're a buyer in this property market in Hong Kong, some good news here for you. Not if you're a developer. So like you have New World in Far East, for example, selling this, residential project at the lowest price in 8 years here at the Kai Tak district here in the city, which is where the old airport used to be. Now, Midland Realty says the pricing represents an almost 30% discount to other projects in that same area. Now, home sales in Hong Kong have resumed falling amid high interest rates and even after extra taxes were scrapped earlier this year. Now, HSBC and its sale or potential sale of its German wealth management unit is said to be attracting initial interest from peers including BNP and UBS. Sources say Julius Baer is also studying the business, which could be valued at around $640 million. HSBC is said to be keen for a buyer with a global brand and existing operations in the city. Shares flat here in Hong Kong. Plenty more ahead. This is Bloomberg. Twins, 58.58. That's the exchange rate now there on dollar peso. Inflation came in about an hour and a half back, softer than expectations. So the year-on-year figure was 3.7%. Within the forecasted range, trend to BSP lower than median estimates. The month-on-month one came in at 0%. And based on some of the commentary coming through out of the statements from the Banco Central, it's looking like they're saying that the balance for inflation has shifted to the downside and that expectations remain well anchored. You just read into that what you please ahead, of course, of the next policy meeting out of the BSP.
Yeah. Also, just taking a look at what's happening in markets today, it's looking fairly subdued here, but we are, of course, seeing a lot of global stock benchmarks really trading at
We've gone a long way.
Yeah. And what's behind it really is just these continued expectations around the Fed, whether we're going to see that cut later this year. Taking a look at Japanese assets in particular, watching that Topix, we are seeing that rally broadening out here. Yen focus as well, hearing from Suzuki on the impact on prices.
Because tonight people here and around the country have spoken, and they're ready for change, to end the politics of performance, a return to politics as public service. The change begins right here, because this is your democracy, your community and your future. You have voted. It is now time for us to deliver.
As the Labor Party leader, Keir Starmer, there addressing supporters just moments ago, and we are continuing to see these results running or coming through for the UK election. One of those is the former Labor Party leader, Jeremy Corbyn, who's also just won his seat in Islington, but running as an independent. As we said, UK Labor Party looking on track here for a landslide victory, reclaiming power possibly for the first time in 14 years. The exit polls that we've been seeing projecting a massive majority of 170 seats in the House of Commons. But it's not an easy road ahead, of course, because the country's new leaders are going to face a very tall order. They're inheriting a basket of economic and social issues from the Conservatives.
The next Prime Minister is in for a short honeymoon as the UK faces challenges on multiple fronts. For starters, there's growth, which is proving elusive. The economy is forecast to expand just 0.7% this year and 1.2% in 2025. That's after stagnating and even experiencing a short recession last year. Productivity has also stalled, falling behind the US and other rich countries. The new Prime Minister is under pressure to control legal migration and to confront small boat crossings in the English Channel, both of which hit record highs under the last government. On housing, the UK would need a city the size of London to catch up on the backlog, with 10 people for every new property in the worst affected areas. Said to be the closest thing the UK has to a national religion, the NHS is in crisis. The waiting list in England has stretched to over 7.5 million, and it's estimated the health service needs an extra £38 billion a year. All of this comes at a time when the UK has a massive debt hangover. Servicing that debt in a world of high interest rates is costing £60 billion a year. Now that threatens to tie the hands of the next government, or to force them into unpopular tax hikes and public spending cuts.
And that was Alex Morgan reporting. We'll also take you now straight back to the UK where, well, we're now looking at pictures of Nigel Farage speaking there in Clacton, and he has won, in fact, a parliament seat for the very first time, I believe, maybe 7 or 8 attempts going into this as well. There we go. So it's been a fairly eventful evening and early morning. Another reason, perhaps, to be smiling at 3:30 in the morning, as they say. Let's get what the implications are from these results as it pertains to the UK's relationship with China, and certainly against the backdrop of when you look at the statement coming through out of the Labour Party and the manifesto, in fact. And this is an excerpt from that specific part, that Labour will bring, this is on China specifically, just to make that clear, that Labour will bring a long-term and strategic approach to managing our relations with China. We will cooperate where we can, compete where we need to, and challenge where we must. Let's bring in Rana Mitter, professor at the Harvard Kennedy School, to talk us through this. Professor Mitter, what does that mean exactly? That says a lot, but it also says nothing.
What it means is that there's not going to be an immediate massive change in China policy. I think it's fair to say that the phrasing you see there is something that actually the outgoing Prime Minister, Rishi Sunak, of Britain's Conservative Party, could also have said. And it draws in some sense from the language of the integrated review, the overall view of defence and security the previous government undertook. But what it means overall is that Labour is going to be cautious. It's going to spend some time looking at what China policy is in areas like trade, where Britain does have a strong trading relationship with China, but also in security and defence, and looking at issues such as cyber hacking and the possibility of, in future, maybe having to take policies that push back against China's expansion in various parts of the world. So it's keeping all the options open.
And what would be the biggest points of contention, do you think? In the EU, for instance, the story is very much around EVs, and we've just seen these preliminary tariffs being announced overnight. What are the concerns that are going to be front and centre for the new government, do you think?
Well, that's right. Ever since Brexit, the UK's departure a couple of years ago from the European Union, one of the issues that the UK has had is whose standards is it going to follow? And of course, in the world, there are really three major players when it comes to norms and standards on issues of imports, exports, and manufacture: the United States, China, and the European Union. Even though, of course, it is the case that the UK has left the EU, it's nonetheless also the case that a huge amount of the UK's trade continues to be with Europe. And therefore, when it comes to trade norms, there's likely to be a warmer relationship than the previous government had with Europe. As a result, although I think it's unlikely that there'll be formal coordination when it comes to British policy on areas such as how to deal with the overcapacity in the EV, electric vehicle area, it is nonetheless, I think, more likely that the probable new Foreign Secretary, David Lammy, and also ministers from the British side relating to trade will speak more to their European partners to try and create more of a united front when it comes to those issues of trade and security. In particular, we can expect in just a couple of weeks' time, the new Prime Minister, Sir Keir Starmer, is going to be hosting the new European Defence Community at Blenheim Palace in Oxfordshire in England. And that will also be an opportunity on security issues to talk about where he and the Europeans see common issues when it comes to China's presence in areas such as cyber, for instance.
So Professor, let me take that a step further. If indeed, of course, we see the UK align a lot more with their counterparts in Europe, for example, should we expect more trade protectionism as it pertains to trade routes with China?
I think that's probably likely to be the case, in the sense that the UK is also going to have to take account of another major factor. Nobody knows, of course, certainly not the new government, as to who the new president of the United States is going to be elected in November, taking office in January. But whether it's a re-election of President Biden or another Democrat, or the re-election of President Trump for the Republicans, I think that Labour will be expecting that there will be more protectionism on the part of the United States. Certainly more if a new Trump administration does carry out the statement that it's made, that it's going to impose a lot more tariffs than even its predecessor. In that context, I think that it's clear that there's likelihood that there will globally be more of a tit for tat when it comes to tariffs being posed one side on the other. And the UK, as a medium-sized economy, although still globally relatively large in overall terms, is going to have to work out how it navigates those very difficult waters. In that context, I think it's fair to say that when China is possibly putting up tariffs against the EU and against the US and then vice versa, that the UK will have to choose sides. And in that context, talking to Europe more may well be a sort of policy of necessity rather than necessarily just of choice.
What do you think is going to be the response to Beijing to this new government? How are they likely to perceive Keir Starmer?
I think it's likely that Beijing is going to reach out in the first instance. I wouldn't be surprised if there's a request, say, for a phone call with new Prime Minister Starmer, and I'd imagine that it's quite likely that that phone call would take place. That would be normal with a newly elected British leader. After all, there have been long-standing diplomatic relations between China and the UK, and I would imagine that Beijing would want to get off on the right foot with a new government. That said, it's not the case, I think, at the moment that it's likely that China will find many areas of common interest. Beijing would expect, I think, that the UK, as is traditional, would follow the US lead quite strongly when it comes to the defence and security aspects of the relationship. And on both sides, it has been the case within the last 2 or 3 years that economic security issues have become embedded alongside more traditional security issues, such as the small but cooperative military presence that the UK has in the region. We can take policies such as AUKUS, the relatively new arrangement between Australia, the United Kingdom and the United States for the provision of nuclear-powered submarines in the region, as the kind of area where China is a little nervous or unhappy about a growing UK presence in the region. And we can imagine that any phone call or outreach in the first days and weeks of a new government would try and mitigate the effects of those sorts of arrangements that China feels in some ways is encroaching on its presence in the Asia-Pacific region.
And what about more on the areas of synergies and cooperation? Let's have a look at that side further. Where can we see these synergies build between the two?
Well, there are areas where the UK and China clearly do have a vested interest in growing their relationship. One example will be higher education, where the UK currently has very large numbers proportionally of Chinese students in its universities. I think something like 150,000 Chinese students started last year in the UK in British universities. So the provision of higher education is a service area where the UK is quite dependent on the China market. At the same time, there is also, I think, continuing enthusiasm in some parts of the UK financial sector to try and find ways to take advantage of China's keenness to increase use internationally of the renminbi, and London's presence as an international financial centre is part of that. Also, we've seen recently that a few major Chinese companies, Shein, for instance, the fashion company, has chosen to list in London rather than doing so, say, in New York. And I think those sorts of opportunities are areas where the UK, which needs to boost its economy, as your report just before this pointed out, will try and see economic cooperation and opportunities with China. But they'll still be more limited than might have been the case a few years ago because of the increasing tensions in security issues between the Western powers in general and China.
That was Rana Mitter there, professor at Harvard Kennedy School. Thanks very much for your insights and as well for staying up so late into the night for us. As we said, Labor picking up seats across the country in the UK election. We've seen Tories losing a significant amount of support, and part of that as well is being attributed to the success of the Reform UK party. This latest headline crossing that Nigel Farage has just won a seat in Parliament at his 8th attempt. But you can catch up on all of the details around the UK general election by going to TLive. You can get commentary and analysis from our expert editors. That's at TLive Go. We'll have more ahead. This is Bloomberg. All right, you are looking at some live pictures there of the Boston Pops fireworks spectacular underway right now to celebrate the 4th of July. Obviously, a spectacular that unfolds every year, and we've been playing it for a
number of years now.
A number of years now. But it's not just fireworks that we're seeing in Boston, of course. You've got fireworks that's taking place in the UK election, and some upsets really just coming in across the board here.
You know, if I didn't know better and I turned on my TV now, I would think that this is a celebration of the Labour win.
Yes.
Simultaneous. Non-related, happens to be the only common thing seems to be the date, July 4th. Now, just on a more serious note, of course, so the BBC is coming out and they have revised, and this is important, they've revised their earlier election forecast. Labour still wins, but with a slimmer majority right now. So the number they're attaching to this right now is 405 seats in this updated election forecast out of the BBC. Labour set to win 405 seats there.
But, I mean, you think about where they were projected, it was looking at around 170-seat majority in the House of Commons. So even if you go down to 165, it's still been the best result that we've seen going all the way back to Tony Blair in 1997. So a lot of challenges that we've been discussing really facing Keir Starmer in the years ahead. You've got concerns around fiscal deficits that that's really coming into fore in a lot of different countries now. How can they manage these debt loads and continue to sustain growth at the same time? So that's some of the challenges there. But as we said, these results just rolling in.
Yeah, and it does seem, based on this latest headline coming through as well, so the slimmer than projected forecast is only marginally down to Conservatives getting slightly more seats than initially thought based on this BBC update. Okay, we'll leave it there for now. We'll get you more once we do have more information coming through as well. We're just moving into close to 4 in the morning there, of course, in the UK. In the meantime, we're looking at EV stocks here trading across these greater Chinese markets, some weakness coming through. And as expected, the EU went ahead, of course, with those provisional tariffs on shipments from China. And you're looking at some of these names, of course, there on your screens. Now, is this it, or is this certainly we're entering the initial salve of greater, sort of broader negotiations around what these tariffs eventually look like moving forward? Well, it's probably the latter based on the commentary coming through out of, number one, the reaction from China's Ministry of Commerce yesterday, and also the comment and the tone coming out of the EU. The European Commission Executive Vice President Valdis Dombrovskis spoke exclusively to Bloomberg about those tariffs and whether he expects China to then retaliate. Have a look.
Today, we took the decision to impose provisional countervailing duties on Chinese battery electrical vehicles, basically to ensuring the level playing field and market distortion coming from subsidies which China is providing to its battery electrical vehicle producers. So our investigation has been done in strict correspondence with applicable WTO and EU rules, facts-based. So from that point of view, we do not see any basis for retaliation, and in any case, it's clear that we need to treat different cases separately.
So you're not even worried about retaliation, for example, into pork? They're investigating it. And if there was to be retaliation, are there specific industries that you think would be most at risk?
Well, as I said, we are not seeing the basis for retaliation, as what we are conducting is indeed in line with WTO rules. What we are also noting is that actually we are currently the largest market which is actually open to Chinese battery electrical vehicles. We know that other jurisdictions like US, for example, have recently imposed a 100% tariff on those. So our aim is not to close the market to battery electrical vehicle producers from China, but only to ensure the fair competition and level playing field. So therefore, once again, we do not see any basis for retaliation for that.
So how's the progress going in terms of talks with China? And actually, is there willingness from China to make some of the substantial changes that led you to then put the tariffs on?
Those talks with China are ongoing, and indeed, should the mutually beneficial solution emerge, we can also find ways and not to apply at the end of the day the definitive tariffs. But it's very clear that this solution needs to resolve the market distortion which we are currently having in battery electrical vehicles and risk of injury for EU industry, and it needs to be WTO compliant.
Are you worried that member states can actually then block this, block the tariffs in November, or force the EU into a bad deal?
Obviously, we are in a close consultation with member states now, also prior to imposition of those provisional duties. And it's clear that member states are also interested to protect their automotive industries from unfair competition and from risk of injury, as actually the market share of Chinese, both Chinese brand and broader, like made in China battery electrical vehicles, is rapidly growing. So from that point of view, if we leave the situation unaddressed, it's going to create more and more problems actually for EU automotive industry.
Executive VP, we're also days away from the second round of the French, of course, legislative election. Are you worried that a hung parliament would actually delay any kind of negotiation on policy, or would delay the workings of the European Commission and the EU?
Well, definitely we'll have to see. Well, there I have to provide somewhat institutional response because in the European Commission we have a clear policy that we are not commenting elections or party politics in member states. We are working with democratically elected or appointed authorities from member states.
That was the European Commission Executive Vice President Valdis Dombrovskis speaking exclusively with our colleague Francine Lacroix, and lots of commentary in Chinese state media on those EU tariffs, and we can get to that for our China brief today because the official Xinhua news agency and state-run Global Times have both published critical pieces. Xinhua says the EU should not politicize economic and trade issues, but should instead collaborate with China to enhance Europe's industrial landscape and meet carbon reduction targets. The Global Times, meanwhile, is focusing on the tariffs' impact on foreign automakers in China because we know there's a lot producing there, the likes of Tesla, for instance, European automakers as well. And it says that the duties are unlikely to diminish the attractiveness of China's car market for foreign investors. In the financial press, meanwhile, the China Securities Journal says the bond market may fluctuate more widely, with the PBOC taking steps to stabilise yields with debt borrowed from primary dealers. The paper spoke to several institutional investors who expect more volatility, although they remain bullish on bonds. The report also says investors could seize investment opportunities in long and ultra-long bonds. That's thanks to an expected increase in issuance in the second half. And, of course, the PBOC, those plans with the banks, one of our top stories today, and a Bloomberg scoop as well.
Yeah, and I think just a note to I think the news and the PBOC came out after, of course, that the commentary coming through there as well. Just for more, it's the same sort of narrative, but certainly there's a lot more information right now that the market is dealing with, hence why we're up 1.5 basis points, which doesn't sound like a lot. That's a lot in sort of CGB terms as well. We'll talk more about this in a moment, but just very briefly, too, when you look at social media, we'll pivot now to housing, to the housing market here. So the rising number of foreclosed homes in China is really among one of the hottest topics this morning on Weibo. Users are reacting to this report saying that foreclosed residential properties listed for auction, to be more specific, they're surged by 43% on year. That's as real estate downturn, of course, continues, and some of the commentary and posts that have come through, it's a complete tragedy. If this number doubles, it'll create a social crisis. Dreams are shattered, lives are ruined, and even banks won't have a good ending. In the end, there are no winners, just some individuals left with shattered dreams. Now, it's the other comment coming through. It's strange that the economy is supposedly booming, GDP is rising, yet there are salary cuts and people are being told to tighten their belts. Is the economic foundation still stable? We'll leave you with a look at that question. Plenty more ahead. This is Bloomberg. Welcome back. Just to recap some of the top stories we've been tracking in the last 2 hours or so. Number one is this melt-up we're seeing in yield. Session highs in a 10-year CGB, as the PBOC has said. It has now hundreds of billions of yuan of securities at their disposal through agreement with lenders in case they do need, of course, to sell into this market.
Yeah, watching the moves there, also keeping an eye on what's happening in the UK asset space. Look, you're really not seeing much across the board here, but is that surprising when you've got the Labour picking up seats across the country, as expected? More ahead. This is Bloomberg.